This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Analysts have cut their 2024 oil price forecasts for a fifth consecutive month, citing weaker demand and uncertainty over OPEC's plans, with prices expected to remain under pressure despite geopolitical risks, a Reuters poll found on Monday. A Reuters poll of 41 analysts and economists conducted in the past 2 weeks projected Brent crude would average $81.52 per barrel in 2024, the lowest poll projection since February and down from $82.86 projected in August. U.S. crude prices are expected to average $77.64, below last month's forecast of $78.82.
U.S. oil demand rose in July to the highest seasonal level since 2019 while output declined for the second time in 3 months, data from the U.S. Energy Information Administration showed on Monday. U.S. oil demand has been more resilient this year compared to other major consumers such as China, which have lagged under economic pressures. Total oil consumption rose 1.2% from June to 20.48 million barrels per day in July, the highest for that month since 2019. Demand for both gasoline and ultra-low sulfur diesel was at the highest seasonal levels since 2019, whereas jet fuel demand of 1.83 million barrels of oil per day was the highest for any month since August 2019.
Moving on to the top news in the energy sector.
U.S. renewable diesel production capacity declined in July by the most since the industry began its rapid expansion 3 years ago, data from the Energy Information Administration showed on Monday. Capacity to produce biomass-based renewable diesel and other biofuels, excluding biodiesel and ethanol, fell by about 299 million gallons per year from June to about 4.60 billion gallons a year in July, the second time it has declined since the EIA began keeping records in 2021. Well-established oil refiners and startups have made large bets on renewable diesel in recent years as government-mandated consumption targets and subsidies lowering costs of production have encouraged investments in supply growth.
The U.S. has bought 6 million barrels of oil for the Strategic Petroleum Reserve for delivery through May 2025, the Department of Energy said on Monday. The purchases are part of an effort to replenish stockpiles after President Joe Biden ordered the largest ever sale from the reserve in 2022 of 180 million barrels in an effort to control fuel prices following Russia's invasion of Ukraine. The U.S. bought 3.5 million barrels from ExxonMobil, 2 million from Shell Trading Company, and 500,000 from Macquarie Commodities Trading U.S., for a total cost of more than $411 million, the department said. Next, we have the top news in metal markets. The global refined zinc market could see a 164,000 metric ton deficit in 2024 due to reduced output in Europe and elsewhere, rather than a surplus as forecast previously, the International Lead and Zinc Study Group, ILZSG, said on Monday. In its April forecast, the ILZSG had forecast a 56,000-ton surplus for the year. Prices for zinc, used to galvanize steel for the construction and auto sectors, have risen 16.5% so far this year. European output is forecast to decrease by 11.4% this year, primarily as a result of reductions in Ireland and Portugal, the group said.
Britain's biggest steelworks will end production later on Monday, when the final blast furnace at Port Talbot in Wales will close after more than 100 years of steelmaking, at a cost of almost 3,000 jobs. The closure of the last blast furnace at Port Talbot, once the largest steelworks in Europe, is the culmination of decades of decline in Britain's steel industry, which has struggled to compete with low-cost imports. Showing the scale of the challenge, India-owned Tata Steel had been losing £1 million a day before it began the process of shutting down its facilities.
We will now look at the top news in the agricultural sector.
U.S. farmers and merchants are sitting on the highest stocks of grains and soybeans left over from previous harvests in 4 years as they start gathering what are expected to be 2 of the largest soybean and corn crops on record. In the final figures for soy and corn still in storage bins from last year, The U.S. Department of Agriculture said on Monday that stocks for both crops were up 29% from a year ago on September 1. Farmers harvested a record corn crop in 2023 and kept much of it in storage as grain prices this year dropped to their lowest levels since 2020. The slump has dragged down farmers' net estimated incomes by 23% from a record high just 2 years ago.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.